Hey everybody, Lawrence here. It is Thursday and it's the Financial Thing live YouTube stream for investing, for peer-to-peer lending, for the news. I don't know. It's for everything. So I wasn't really going to stream today. That was never the plan, but I thought, why not? I had some time to do it today. I planned originally on coming back on November 7th. To be honest with you, I've been having the blues. I've been feeling a little bit down in the dumps because what has been really a crazy 2 weeks. Here in Orlando, you probably heard we had a pretty horrible storm that passed close by, and I was due to take a holiday just 2 days after the storm was due to hit, and I decided, I had family were here from England, still here, and we decided to get the heck out of here early, and we packed up and left, changed our flights 2 days before the storm hit. Jettisoned, they went to Tennessee, I went out to California, and we all met up in the wonderful city of Las Vegas a couple of days later. But we had a great time, and since getting back a couple of days ago, I've kind of really been feeling, that post-holiday blues. I'm sure you've all experienced it too. So, when you get back from a good holiday and you come back to life, back to reality, and the last thing, honestly, I really didn't want to stream today. I was not planning on doing it, but then I thought, you know what, the only way to get out of a funk is just to jump in and keep those feet moving forward. So that's what I'm here to do. Holly is here too. She's having a good sleep. Happy to be home. But quick hello to our sponsor, Cufflink. Of course, Cufflink is the sponsor currently of the Financial Thing Livestream, where you can earn up to 9.13% gross per annum, over £350 million invested since 2016, zero investor losses to date so far. Please remember your capital is at risk. Don't invest unless you're prepared to lose money. Please check rates on Cufflink's website as these investment rates do change. You can sign up at join.cufflink.com/financial-thing. Link is in the description below if you want to check them out. But yeah, have you ever had the post-holiday blues? Please tell me I'm not alone. Also, subscribe to the channel. I know originally on November 7th we were supposed to do a Cufflink live stream. That has been bumped to the 14th of November because I have some commitments on that evening, that day that I can't be here. So November 14th, there is going to be two members of the Cufflink crew here live. We're going to be talking to them about peer-to-peer lending and everything that's going on at Cufflink. So put that on your calendar. And I don't know if I'm going to be streaming next Thursday. It depends. Oh, it's Halloween, isn't it? The 31st of October. If I don't stream next Thursday, I'll be back on the 8th of November, which will be a Friday. So a little bit different schedule upcoming, but yeah, it is what it is. So thanks for joining. I'm not going to continue muttering on about this stuff. What are we going to talk about today? We got some peer-to-peer lending news, as we do. A little bit of Lonepad news. I'm going to show you the Trading 212 portfolio and what's going on with that. We're going to talk a little bit about stocks, and I had some interesting emails from the mailbag, which I will put up, and we'll kind of talk about those things too, which is super cool. A couple of really good questions this week. We'll talk a little bit about ICEs. Yeah, I don't know. That's about it. I shaved too. My niece is here currently with me, and she said, Uncle Lawrence, you look younger. So maybe I do. Who knows? Anyway, let's get right into it. Quick hello to everybody who's watching live. Stevie is here in Macclesfield. Darren is here. Chimpo Naughty in Cambridge. Colin Perry in the Peak District. Peter Vince in Leatherhead. A gloriously sunny afternoon. Yeah, by the way, it's about, not to make you jealous, but it's about 29 degrees here in Florida today. It's a little warm. I'd like to see it cool down, hopefully soon. Hopefully no more storms. I've had enough of these storms. Alan Stratford is here. George Batchelor from Bridlington. Alan Stratford's talking about the secondary market listings on Landlord Invest. Lots of availability. Mike Powell is here. Hello, Mike. How are you? Glad you could join. Let's get right into it. I'm not planning on doing a long stream this evening, so probably just a half hour or so. We'll see. Here we go. I think we talked about this on the last stream, but if I didn't, because I'm a forgetful old man, Funding Secure Administration has been extended by one more year. No surprises there. They're saying extended until the 22nd of October 2025, adding at least one more year. Say at least, because let's be realistic that it's going to be more than a year. I would imagine 2000. If I had to take a guess, 2028 would be, I think, maybe 29, maybe 30, 2030 before this thing gets wrapped up. Who knows? We'll see. According to documents filed on Companies House, CG & Co., the administrators have been authorized by the High Court to extend the administration process once again. This has been going on since 2019 when the company went into administration. So put that into perspective. 5 years ago, Funding Secure went into administration, and it was extended originally in 2020 for 3 years with an end date set for October 2023. So come on, I mean, this is going to take another 3 to 5 years for it to wrap up properly. We'll see. According to the latest administrators progress report published on the 31st of May, total gross loan realizations amounted to $1.495 million, and total gross loan realizations to date were $50.2 million. So at least some of that money is coming back. The $1.495 million is the period 23rd of October 2023 to the 2nd of October 2024. There are 52 remaining defaulted loans, representing outstanding capital of $10 million, so about 20% left of the total gross loan realizations for CG & Co. to go after. We'll see. Total withdrawals from investors have been $33.5 million. I mean, at least money's coming back in, even though people are... I think on my account I've gotten, I want to say, maybe 50% of what was defaulted back, so it's probably better than some of the other administration recoveries out there, aka Lendy and specifically collateral, which I have 0 back from. So I'm happy to get 50% back, and if that is all I get back, then that is it. We'll call it a day. Mentos is partners with Upvest for all our European peer-to-peer lenders out there. You can get ETFs now through Mentos, and they are partnering with the technology provided to enhance these ETF exchange-traded funds portfolios that you can buy through Mentos across Europe. Personally, I wouldn't buy an ETF through Mentos. I don't really see the point. Why would you not just go to a regular stock brokerage to do that? But they do allow it. Of course, Mentos makes money off that, so they are going to offer something like that. And for somebody that's really into peer-to-peer lending and Mentos, now they can just do it all in one place. I did log in to Mentos to take a look at these ETFs. I don't think that I can actually invest in these things now because they don't offer it to UK residents, but I was just going to show you. This is my current portfolio. That is basically all defaulted loans of 226 euros, but I thought, let me go and look at the ETFs and just see what they have. So I clicked on ETFs, and apparently I have to go through a assessment test to see if I qualify. But they have apparently these 0-fee ETFs. Let's go ahead and complete the assessment, see if I even qualify to do this. Do I want fractional bonds? Probably not. Let's see. What do they allow? Invest in loans. So I can't even looks like I can't even invest in ETFs, probably because of me being a UK resident. Can I invest in fractional bonds? Not that I ever would, but yes, that is available. So for anybody living in the EU or outside the UK, you want to invest in ETFs, you can do it. We cannot here in the UK, people. They do have things like iShares and Vanguard, so that's pretty cool that they do offer Vanguard ETFs. But again, something I cannot do. European peer-to-peer real estate yields average 10%. Apparently RoboCash did a study, because RoboCash is always doing studies, which is nice. But they are saying that real estate investments through peer-to-peer lending in Europe have averaged returns of 10% in the year to date. The Croatian-based peer-to-peer platform said these returns are in line with the rental yields on the continent of Europe. The study found that between 2021 in 2024, the average rates of the peer-to-peer lending real estate market have changed very little. I would take those numbers with a pinch of salt, because it also says here that in certain countries those numbers can really change. So Switzerland, Germany, and Austria have reported profitability of 5 to 7% at certain points over the last 4 years, while Southern and Eastern European yields have reached 20% in some cases. RoboCash noted the yields on rental housing markets have been quite conservative over the past 4 years, averaging 10.65%, just higher than average peer-to-peer real estate returns. Obviously, certain parts of Europe are a lot more riskier with real estate than other ones. If you go to places like Croatia, some of the Baltic states, you can certainly get much higher than 10% returns, but you are taking certain amounts of risk. Those countries tend to be more financially and economically impacted by things that are going on in the globe, and those fluctuations can be quite severe. Whereas you go to more first world European countries, probably Germany, like they say Switzerland, Austria, you're going to get lower returns, but might be considered certainly safer. Depends what your risk appetite is. But if you do want to invest in peer-to-peer real estate things through companies like Mentos, you can get pretty good returns. Easy Money reaches £400 million in lending. That's a pretty big milestone for them. 3 months after the property lender revealed that its live loan book had reached $200 million. They have funded more than $380 million of loans. Now it's up to $400 million. They've paid out £40 million to Easy Money investors, 4,800 of them. I would imagine that's interest payments. What a big milestone for them. They seem to be really moving forward. It says we've distributed, this is Easy Money, over £40 million in client interest since our inception and exceeded $200 million in current active loans. They've also been nominated for IFISA Lender of the Year and UK Lender Bridging Lender of the Year, sub £1 billion in the upcoming Alternative Credit Investor Awards. Easy Money still offering pretty decent rates. Here you can get 5.53% on their premium account, and then if you want to put in 20 grand plus, you get 6.52%. That's a lot to have to put in. So you can go to Lonepad, you don't have to put in 20,000 on their 60-day notice account. You can get, I think it's 6%. So for anybody that doesn't want to stick in 20 grand, you can use Lonepad. But they seem to be really expanding, so good for them. Investment fund peer-to-peer has earned its place in private credit. What is private credit? Private credit is basically private money being loaned out to businesses, real estate developers, things like that. In the U.S., they call that also hard money lending, which is where an individual investor can go ahead and loan money backed by real estate to individual people that are looking to buy property and do investments. But private money tends to be much bigger deals, where there's a lot of institutional companies now that are getting money from private individuals and then loaning it out, so that way people don't necessarily have to go to the bank to get money. But what Investment Fund is saying is that peer-to-peer has earned its place in private credit, saying that it should be included as part of that offering to people looking to gain money. Private credit is a very, very big market right now. It's set to grow, according to Moody's, by $3 trillion by 2028. So Investment Fund wants peer-to-peer lending to be included within private credit. Let's talk about ISAs. Scrapping British ISA may forfeit £14.7 billion of investment. There are some people that believe that the ISA may get scrapped. The new UK Chancellor Rachel Reeves is rumored to be planning to scrap the tax wrapper before it even launches. And truth be told, I don't know anything about what Rachel Reeves is planning to do. That might be a bit of fake news. It might be real news. Maybe that this tax wrapper is going to be replaced by something else. But certainly, I think on October the 30th, there is going to be a new meeting or announcements about what's going to happen. I don't know if it's the budget announcement on October 30th, but I recommend that if you haven't gotten your ISA money invested for this year, certainly go ahead and do that, because if for some reason that ISA does get scrapped in October of this year, then you'll want to take advantage of that £20,000 tax-free amount that you can invest. Now, there are other people that say that the ISA is going to be increased from £20,000 to £25,000, which would be a great thing. I think if the UK government scraps the ISA, that would be the most ridiculous thing. I mean, it really is about the only thing that the government does give you that I see as very beneficial. This £20,000 tax-free money that you could put in, invest it, and you don't get taxed on the growth. The government is, the taxation is just getting ridiculous at this point. I know I just wrote a check for my late mother's estate for inheritance tax. It was pretty disgusting because of bad planning on the family's part, but definitely take that ISA advantage now. It wouldn't surprise me if they did scrap it, because that's money that the government is not getting from you on your on your growth, on your investments, which the government wants your money. They don't want to give you anything free. They don't want to give you tax-free anything. So go ahead and take that tax advantage money if you have an opportunity to do so, because if it does get scrapped, you're going to be kicking yourself that you didn't put that ISA money in. Although I'm sure they'll give notice and say, if we are planning to scrap it, we're going to give you X amount of months to go ahead and contribute to your ISA currently. I would hope they would do that. Who knows nowadays? But go ahead and do that just in case. This article says that a survey of the UK public found that 37% are either invested already or plan to invest in ISA before the financial year expires. Of this 37%, 17% plan to already have maximized the current tax-free threshold of £20,000. However, just 16% were even aware of the British ISA, and of this 16%, just 29% stated they had already planned to invest into it when it did become available. Kind of what crazy statistics when you think about it, that just 16% of people that were surveyed even knew what the British ISA was. The lack of knowledge on the ISA is kind of astounding to me, and the fact that only 29% of 16% of people said they had invested into it. But yes, people out there, if you've not invested into an ISA, just do it. It is, I think, one of the best things you could possibly do with your investing. You can do it through peer-to-peer lending. You can do it through stocks and shares ISA, or you could do it through cash if you want to be the safe route. You can invest into a savings account with an ISA, get that tax-free on the growth. Just do it. Makes sense. Come on. Lonepad. autumn 2024 update. I like getting these updates because Lonepad gives me the warm and fuzzies, just like some other peer-to-peer lending companies do. We hope you are keeping well. Yes, we are. Thank you, Lonepad. Writing to provide you with a brief general update. They've got 100 million under management. They've are within touching distance of 100 million in funds under management. We have only been able to get here on the back of the trust that investors have shown to Lonepad. They're very grateful. They launched back in 2019 with an uncompromising lending structure designed to ensure as far as possible that investors were protected against any unexpected economic shocks. In the brief 5 to 6 periods since launch, that's 5 to 6 year period, they've been through not one but two dramatic economic shocks. We've got the pandemic, which needs no explanation, and the rapid interest rate rises of the last 2 years from a starting point of 0.1% all the way up to 5.25%. Throughout these testing times, Lonepad's lending structure stood strong and helped to ensure that not a single penny has been lost to date. Very proud of that track record, not complacent, and they remain laser focused on protection of investors' money. Let's look at the loan performance. All loans in the loan portfolio continue to perform in line with expectations, and they do not presently see any upcoming issues. We've got 235 loans in the portfolio. Average loan represents 0.425% of any funds that investors have invested, steadily reducing as the portfolio grows. What that means is you take your basket of loans, average loan is 0.425% of your money in one single loan. The average loan to value is 42%. Total value in the portfolio of loans is £183 million. Lonepad investors have 97 million of that, and lending partners have 86 million pounds of that. There are 19 current lending partners and others waiting to be added. Total all-time loans is at 287 million lent. That's 758 loans, with 190 million pounds paid back to date. So really positive things. They're just very slow and steady, continuing to stick to the road that they have paved right from the beginning of 2019, adding lending partners and offering what I consider one of the lowest risk peer-to-peer lending investments out there. Again, not financial advice. Look at the Blend Network Property Pulse. They send this out every month. It really talks about just the general lending market, what's going on with house prices, because obviously they are a peer-to-peer real estate lender, so this affects them a lot. Planning approvals plummet. This was very interesting. They're saying that the Home Builders Federation's latest pipeline report was published recently, and the findings were largely grim. This covers the report 3 months to June 2020, finds that the number of units and sites gaining planning approval has continued to dive for another quarter. The data finds that 12 months to June, they had the fewest new home permissions granted for over a decade, illustrating the scale of the challenge the new government faces as it tries to increase housing supplies. Look at this, minus 10% approvals for new planning builds. That's really challenging. Having said that, then according to Nationwide, Northern Ireland has remained the best performing region in quarter 3 of 2024. Prices are up 8.6% year on year. I think Blend still continues to focus on deals in Northern Ireland as well as other parts in the UK. But those housing, I didn't show you that. Those are the stats right there. Those housing approval permits, minus 10%. Why is that happening? Well, either people are not borrowing money to make new builds, like developers, or either that planning permission people in the government are denying more and more things, because that's what they do. And the long, lengthy process of getting building applications approved nowadays and planning permission in the UK is becoming more of a headache. 0.7% nervousness remains. According to Savills, fear around tax increases ahead of the autumn budget have held back recovery in the housing market. The research shows the prices fell 0.7% in Q3 of prime central London. Yeah, no biggie. How are we doing for time? Okay, let's go quicker. I was going to show you, I got somebody had emailed me a question about crowd property and what I thought about their situation, because I had turned off my auto lending for a while. I just wanted to see how they were going to handle the loans that were late or past due or in default. So I decided to just kind of go into my account and take a look at what was going on with the statistics in there and show you where I'm at. You can see here, currently I've got about 871 pounds of active loans. And you can see here the overdue situation. Total, what are we talking? 1 to 3 months late, 70 pounds. 6 to 12 months late, 50 pounds. 12 plus months late, 261 pounds. So we've got about 11, 12, 380 pounds of 871 that is now overdue 1 to 12 months. So what does that represent? That represents about 35% of the portfolio. It's not really ideal. One thing I did was went into the portfolio here and just looked at some of the really older loans. I wanted to see how those were being handled. Here's one that has a loan date ending of 2021, so we're now 3 years, coming up to 4 years past on this one. What is going on with a loan like that? Let's see. Let's just go to the update. So receivers were brought in because of the lack of progress. You can see all the reports here from 2022 going on to 2024. Let me see if I can pull up the latest report. Remediation works have been completed and signed off. Receivers continue to monitor the situation. The developer has a series of meetings with a potential tenant. They'll be looking to take the whole property. Further meetings taking place. Exit strategy. Trying to find a way to exit that. So let's look at the next one. That one had 0 interest paid on it. I had a relatively small stake in that one. So this again is one that's been dragging on now for about 3 years. There seems to be some planning consent issues. We haven't had a update since April 4th. Writing to update you, the borrower is currently exploring their exit strategy. They are currently in talks with the housing association. Blah, blah, blah. So no update in 6 months. That's not really a good sign. Oh, wait, sorry, I'm missing. I take that back. Here's an update, July 16th. We're now addressing technical points in the planning consent. We continue speaking to JV partners and end users, monitoring the situation closely. So really nothing much has happened in 2024 except for a bunch of monitoring. So, I mean, this is the reason I kind of just say, watch your portfolio, take a look at what's going on in the loans. Some are partially repaid, but it's always good to really keep an eye on that. When those those loans start to become 12 months past due, 260 pounds out of a 837 pound portfolio is not really ideal, and hopefully that will become fixed. Trading 2122 portfolio. I logged in and I was looking back at the history before I show you how the portfolio is doing. It's doing pretty good. It was interesting to go back to 2021 and look at some of the things that I had sold back then. If I had just had the common sense to hold and not sell, would have been much better. But you can see here Meta, this was the 9th of September 2021 of Facebook investment. Ended up buying it for 378 pounds. I think I sold it very soon after trying to trade. And now that Meta price is, let's see, I think it's over 570. Oh, look, 566 pounds. So it's done pretty well, but of course I didn't have the common sense to hold that stock, which again is really shows the importance of when you're investing, buying and holding, not trying to sell things, especially individual stocks where you really just don't have any idea what that stock is going to do. But certain heavyweight stock, blue chip stocks, probably have a pretty good chance of just going up in value over the long term. So you can see that's over 3 years. The price has gone from 378 to where I bought at to now 566. So was that 80%? But of course, I'm a bonehead and I sold it. Also, I noticed here I bought some Palantir, which is kind of one of those weird stocks, but 27.79 I bought it, and I think I sold it less than that. The problem with trading 212, you can't really search by stock as far as I've found. It doesn't allow you to do that, so I had to kind of scroll through. But you can see here Palantir's price right now, $43 and 30. I don't know if you can see that, but 43.13. So again, just another example of over 3 years how just sitting on the hands and not doing anything was the best strategy, and trading and selling was very, very harmful. So there you go. Learn from my mistakes. But the portfolio right now is sitting at 22,531 22,534 pounds. So we finally breached over that 22,000 pound mark on the portfolio. It took a while. To do it. Yeah, you can't see. Let me zoom out. There you go. 22,530 pounds, 51p currently. We've had a bit of a pullback with the tech stocks. AMD, the chip maker, has pulled back a little bit. Let's see where they were 1 week ago. Yeah, they were up to 157, now pulled back to 153. They're up to 173 the beginning of the month, so we've had some pullback on there. Amazon just kind of ticking away a little bit in the green, 5% plus. Coinbase, they've had a good run because the price of Bitcoin has really taken off. It went close to 69,000, now it's pulled back into the 66,000 range, but that stock went all the way to 225. Now it's pulled back to 206, but still 23% ahead in the portfolio. Crex, Creative Realities, just seems to just be stuck, and is now 457. Nvidia has had a nice run in the last month, coming from 116 up to 143, is now sitting at 139. So we're up about 42% on Nvidia, which is good. Valco Energy, again, just kind of bouncing around up and down, still 24% in the green. And now trusty, look at this, our trusty S&P 500 Vanguard purchase, which is the very boring thing that everybody should pretty much do. Not financial advice, but this is the recommended way. Up 8%. Haven't had that investment all that long, but up 8%. You can just see the steady climb here from September up to now. That's what you want. Slow and steady wins a race. This is honestly the way that nearly everybody really should think about investing and not doing this stuff, because this stuff, while you can hit some home runs, it's very risky. So the portfolio is doing well. Let's go to the mailbag. Hi, Lawrence. Hope you made it through the nasty Milton storm okay. Yes, I did. Thank you. I read an article today from Goldman Sachs saying that the S&P 500 would return 3% per year over the next decade. That is pretty scary when I rely on my stock investing for retirement. What are your thoughts on this article? Should I be looking for other places to invest money if this is the case? Thank you in advance. Hope you can answer this. Cheers, Ollie, a 35-year-old Londoner. Great question, Ollie. And thanks for sending that in today. It was good timing. I did see that article. You can see the article too. It's all over the news right now. Goldman Sachs predicts a sluggish S&P 500 growth over the next 10 years, warns of lower returns. They're saying that it will return an average of 3% a year over the next 10 years, significantly lower than 13% yearly return over the last 10 years, which is noticeably below the general market consensus of 6%. They're indicating a marked slowdown in growth, blah, blah, blah. So, Ollie's question, what are my thoughts on this article? Well, I went back to an article in November of 21st of 2023 where Goldman Sachs, they made a prediction here, said they forecast the S&P 500 index will end 2024 at 4,700 points. We are now the S&P. Oh dear, I don't want to join for free. I'm already joined. Let me just look at the chart, please. The chart right now is reading 5,802. So Goldman Sachs' prediction of 4,700 was 1,000 points off, which is close to 25%. So my answer to you, Ollie, is that Goldman Sachs has a pretty much about as good a chance of predicting what the actual outcomes of the S&P 500 are as you and I, which is not very good. They don't have a good chance. They don't know. They don't know. And I can speak from experience that I have made some investment decisions in my lifetime based on articles like this, and it has really been very costly. Because imagine if you'd have sat out of the market over the last 3 years because of all these doom and gloom articles that come out and say the market is due for correction, everything is going to crash, it's been going up for such a long time. You'd have missed out on some pretty amazing historical returns. And while it's good to read these types of articles, right, from these people like Goldman Sachs, they do have access to maybe data that we don't have access to make a formed opinion. Having said that, I would not put too much emphasis or weight into these types of articles because there's just no way of predicting that. Case in point, Tesla came out today, had really great earnings. Everybody was saying, it's going to be hit and miss. They came out, the stock went up 20%. So trying to predict this stuff is absolutely useless. I would just stay the course, invest the way you've been investing, and keep putting your money away. And I'm sure over the next 20 years, since you're 35 years old, Ollie, in London, you're going to be just fine. And two, inflation is going down. We've seen the UK inflation now stabilizing, according to these articles. I don't necessarily believe this is actually the real inflation, but if we believe that is, which I don't believe, but anyway, 2.6% inflation for September, the 12 months from 2023 to 2024, down from 3.1% in August. So apparently inflation is getting more under control. Same in the US. Inflation back to 2.4%. So, these are good things, right, for the media to report because it makes people feel good about what's going on in the economy, which means people are going to spend more money, blah, blah, blah. Company profits will go up, and there should be some growth within the companies, the S&P 500, which should in turn make the stock prices increase. We'll see what happens. Another mailbag question. Lawrence, forgive me if this is a very basic question compared to what you're used to receiving, but I was wondering if you could explain how compounding interest works within peer-to-peer lending. I just can't seem to wrap my head around it. I really enjoyed the YouTubes, although I don't watch them on Thursday, but keep doing them. Thank you, Peter. Thank you, Peter, for the question. Compounding interest is pretty simple when it comes to peer-to-peer lending because it's the same as if you use it in a savings account or stock investing. With stock investing, compounding is basically if you were to get paid a dividend on your stock, you just take that dividend and buy more stocks. So instead of having 100 stocks at the end of the year of a certain company because of the dividend, maybe you have 101 stocks, and next year you might have 102.5 because you're using that money to compound. Peer-to-peer lending is exactly the same way. If you have a £1,000 investment, I'll just show you here. and you're getting, say, a 5% interest rate annually, and your compounding frequency is 1 year, so at the end of that 1 year, you're going to have 1,051 pounds, right? So the following year, you put the 1,051 in, you should end up with 1,104. So what it's basically doing here is taking your interest, adding it onto your principal capital amount, which is your original starting balance. And then as the years go on, you'll see that investment double. So right here you can see time to double investment, 13 years and 11 months. So in 13 years and 11 months, at this rate, your 1,104 pounds will become 2,208 pounds. No different within peer-to-peer lending is you were getting a interest rate, hopefully, on your investments. So if you start with 1,000 pounds of peer-to-peer lending money, you're getting a 5% interest rate every year. At the end of year one, you're going to have 1,051 pounds. If you leave that money in that investment, it just keeps compounding. It works exactly the same way as it would in a savings account. I hope that answers your question. I found a really, really interesting Reddit post from this was 11 years ago. I thought this is kind of fascinating because, again, it really illustrates the idea of how important it is when you're investing to buy and hold if you believe in what you're investing in, and jumping in and out is really a bad idea. But check this out. This was 11 years ago. I put all my life savings into Bitcoin. Last week, I put all my life savings into Bitcoin. I'm only 30, so I know it's a risk. But I still have a chance to recover if it crashes, and I have a full-time job anyway. I just thought how people around me are putting money into their houses, children, and expensive weddings. They never get a return on it. I also thought how most people will go through their whole lives and not take a risk and go for it. And when I'm older, I will not be able to do things like this. I will be a lot more conservative, and now is the time to take a risk. Remember, this is 11 years ago, so this will be 2011. So this person says that they put 50,000 US dollars into Bitcoin. The guy says, I don't know how long I'll keep it in, but I'm thinking 5 to 10 years, maybe longer. I haven't told anyone. I don't plan on telling anyone, but I feel good about it. Blah, blah, blah. So what a crazy investment to make in 2011. You were talking, let's see, depends when he did it. I don't know what his date was, but if he did it early 2011, he was able to get in for less than $1 for a Bitcoin. Later on in 2011, around $4. So kind of a big fluctuation because it 4x through 2011. But if that person had the foresight to hang on that whole time, which probably they didn't, I would imagine when they saw the prices start to get up 16,000 range, they probably said, oh, I'm good. You know, I've made massive gains on that original 50,000 investment. What are you talking about? 1,000x, right? That's crazy. But if they did have the 4x, the foresight to hang on all the way, maybe they're still hanging on today. That person is a multi-hundred millionaire. But again, it just goes to show you if you have conviction in something, buying and holding. I'm not saying Bitcoin is the thing to do it. It could be for some people. It certainly could be a part of a diversified investment portfolio along with stocks and shares, peer-to-peer lending, savings, and property if you can afford it. But being able to sit on your hands and doing nothing could be the best thing that you could do with investing. I think it's very important, especially with things like index trackers, to do exactly that. Is just sit on your hands and do absolutely nothing. So really, really interesting article. I'd love to know what happened to that person. I don't know if they posted again. I didn't see anything because I went to the newest comments, and the newest comment was from 3 years ago. It said, just found this good thread on Google. How did you do if you kept your money in Bitcoin the whole time? This was 3 years ago. I believe your Bitcoin would now be worth 214 million. So imagine off of 50 grand back then, 214 million. It'll be a lot more than that now. Because, I mean, look at the price right now. 67,892 per price today. So absolutely massive increase, but also one of those ones that one would consider a real shot in the dark, once in a lifetime swing at generational wealth, and most people are not willing to take that kind of risk. And if that guy's telling the truth, he did. Hopefully he made it. I think that's it. That's all I got for you today. Let's see. Pretty tired. My voice is a little strained. I'm just gonna have a drink of tea. Hope you enjoyed the content today. If you did, just go ahead and hit that like button for me. Subscribe if you're not already subscribed. Go check out Cufflink. Very generous sponsor of the stream. Let's see if you have any interesting comments. Annabelle Nyron is here from a flooded Hispania. Oh no. That's the problem with storms, it's not necessarily the wind, it's the rain. I read a really sad story today about a guy in North Carolina in the U.S. who lost 11 of his family members, his parents, his uncle and aunt, and cousins from a mudslide. Very sad. Would I invest in Mentos if I could? I don't think so. 6.5% Lonepad, yeah. Autumn statement, mini budget on the 30th of October. I think that's a full budget. There's no reference to scrapping ISAs, just the extra 5,000 pounds that was muted. I hope so. It's not a lack of knowledge of the ISAs, the additional 5,000. Maybe I misread that. Wouldn't be the first time. If you want to search by stock, go to the stock page and click history. Is that trading 212, I'm presuming? Let me see. Let's see if I have my meta. Let's see what I sold it for. It's probably going to make me a little annoyed. Meta. History, here you go. Good tip, Mike. Oh no. That's not the right thing. Meta. That's not the right meta. Meta platforms. Try that one. History. Let's see, we bought a bit, and let's see what we sold for. $330, look at that. $230 less than the prices today for a loss of £47 and 10p. So there you go. This is why trading is absolutely disgusting. Sometimes. Let's see what the Palantir results were. It's probably going to make me annoyed. Palantir sold. Look at that, a loss of 435 pounds, $13.89, because I didn't have any conviction in Palantir that stock price was going to go up, and then it 3x'd. So there you go. This is why trading is bad. Don't trade. Not financial advice, but don't trade. I think the trading 212 portfolio has been good in general, but a lot of it has been blind luck and being in the right place at the right time through a period of massive growth through the stock market post-pandemic, where the market obviously dumped and then took off like a rocket ship. So I don't know that was anything particularly skill related, but we'll see. Hopefully at the end of the year, this portfolio, anything over a certain, I'll have to do a little bit of research as to where that threshold is, but I want to give some more money away to the Forest Home down in Poole and Worldwide Healing Hands organization make a donation from the profits from this portfolio. So I like to do every year. So hopefully we'll keep on going up and not crash. Anyway. Well, I think that is going to do it. Thank you to everybody for joining. and it's been good. It's been a good stream. What? In the news, Paul Tudor Jones is going all in on Bitcoin. Is that right? I have to see that now. He says he's long on gold and Bitcoin. Wow. I mean, this is kind of crazy. This is a 70-year-old man who's worth $8 billion US, saying he's long on gold and Bitcoin as a hedge. Fund Titan believes all roads lead to inflation. I agree with him. I'm pretty sure that he's right. I can't read that article. Can I read this one? Hey, you know what I feel about Bitcoin. People don't agree. Some people do. We'll see what happens in the long run. That's only time will tell. So it's good to see. Anyway, again, I don't know if I'll be here next week. Check the email if you're not signed up on the email list. Go to financialthing.com, put your name, email in. I send out emails every week when I'm going to stream. It may not be next Thursday. If not, it'll be Friday the 8th of November. Can't believe it's almost the end of the year, but thank you for joining. It's been a good time. Hope you enjoyed it. And that's all I got for you today. So I will see you next week. Take care. Bye-bye.